Well, good morning, traders. Welcome to the last webinar of the week. It is Friday, and I have just realized it is Friday the 13th. So those of you that are old enough to remember Freddy and Friday the 13th, the horror movie that came out in the 1980s, well, today is that day, people. I remember that film. I remember watching it when I was, 10? My God, I had nightmares up until I was 20. Incredibly scary. So guys, do me a favor, just give me a yes if you can hear me, and you should be looking at the Forex Factory calendar as well. And I'll do the usual round saying good morning to Anthony, Stuart, Ashraf, Terence. Good morning. Chi. I got a yes from Ashraf, a yes from Anthony, and a yes from a few other people as well. Fantastic. Guys, did I set the YouTube live for 9 o'clock? Because I sent the email out for 9:40, but while I was out, my wife said we've just got a YouTube notification to say it's going live at 9. Well, I set YouTube to 9:40. I was in a bit of a rush this morning, so I set it to 9:40. I may not have clicked save. So apologies if I did. Damn. Okay, I did set it to 9:40, but I mustn't have clicked on save. Okay, so and when I was out, I was actually checking my mobile, but you cannot alter the time on a scheduled event from your mobile. They don't have the functionality. You can only do it from a computer. I couldn't even access the page, and literally, I just couldn't get back in time, and I couldn't log into the system. There's a security feature on the system, on the website, which says that if you're already logged in at another computer, you can't log in here. Now, that was meant to have been fixed so that you could manually log yourself out so you could log in. And I've just come across an error, so I've just emailed the IT guy relating to that as well. So apologies, guys. Apologies. So let's run through the Friday's Forex Factory calendar. And there is a little bit of news out today. We do have the dollar news at 130, core retail sales again at 130. So a little bit of news out there just to be paying attention to, but generally speaking, not a great deal out here in terms of the news events. So we'll move that off to one side. We've had some nice moves yesterday and some predictions that paid out and some winning trades, and a trade that is moving now very nicely in my favour, which is the New Zealand dollar, which I'm very pleased about. I did say at the beginning of the week started to see a change in the trading, and a good three of the predictions we've made came off. So we're going to run through those, and we're going to look at any other opportunities that are out there. So guys, if you do have any trade ideas, you have any questions regarding structure, breakout patterns, anything at all, please put them in the chat. This webinar is not just to run through the current opportunities, but to answer any questions you have, maybe come up with some ideas what we can use as entries, where stops should be, where targets should be. So there's no such thing as a daft question. If you do have anything like that, throw it in the chat and we'll quite happily run through it together. Let's bring over the Aussie dollar CAD first of all. Just to let you know, guys, I'm actually waiting on a phone call. Sorry, just checking my phone. I'm waiting on a phone call at around 10. I've got it's my investment manager that's over here, and I do need to take the call because he's going away for 2 weeks. So I'll let you know if the phone rings, and I'll be a couple of minutes speaking to him. Okay. So Aussie dollar CAD. Well and truly, our predicted breakout pattern rallied and hit those targets. Now, guys, I have already run through this a couple of times. Do we have any new people in here? If we do, I'll run through this again just to show how this trade played out and look at the entry stops and targets. Do you just give me a yes if you want me to run through this again, or give me a no if we'll just do the higher time frame analysis? What would you guys prefer? A yes to run through it again, or a no? Got some good trades to run through today. Nothing at market, but things that have played out. Ashraf says yes, please. Okie dokie. So there's no such thing as too much too much education, is there? So on the daily time frame, structure level in at our lows just here. This was a valid double bottom, and what we've seen as a result of that double bottom is boom, we've seen a rally. Did we violate the V point, which is the very top of our double bottom just here? Because if we did, that's an indication that we can go higher, and we absolutely did. And a couple of things can happen now is we can continue straight on up because of this rotation pattern, or we can see a pullback for a 26.18 trade. Now this is days and days away. However, for me, this isn't going to be a valid opportunity. Does anybody know why I would not be interested in buying this 26.18 trade up? And I'll just give you a bit of a clue. If this is the outside return, we have already done something. What have we already done, guys? What have we already done? Just chuck it in the chat for me. I'll even give you a second clue without giving away too much. If I do that, what have we already done? We have already come into, exactly, Chi, we have already come into the structure level that I would have expected to have taken targets at. So there is absolutely now no reason for me to believe, there's no reason for me to get involved with a 26.18 trade. Now you could say, okay, well, we could theoretically come up to the highs here, but what we're doing in that instance is we're reducing down the probability of the trade going on to win, because we don't actually have any confirmation the market can come up to here. This is the entire outside return. And for me personally, we've already come into the area that I thought we would. Now, if we drop down the time frames and we start to see something like this, and I'll drop down the time frame shortly, but just imagine we're on the 60-minute time frame and we start doing this and we start trending. Well, there's no reason then why we can't get in a trend continuation trade, because we have extra confirmation that the market is trending and that we're moving in a bullish way. So what I like to do though is on every time frame and on every currency pair, I like to look at psychological numbers, fibs, rotation patterns, structure, breakout patterns, advanced patterns, anything at all which will give me an indication that we're at a structure level and we could see a reversal, or we could see a trend continuation, or we could see a breakout. Okay, so I like to look at all of those. Don't forget the RSI, Chris. The RSI as well. So bigger picture right here, double bottom, break above, close above, but we've already hit the structure level we're at. First of all, are we at a psychological number looking right? Well, if I put a structure level on just here, then there is a psychological number here. There is the 9100 psychological number. I love psychological numbers because they act to support resistance, the great areas to hide stops behind, and we typically see some form of reaction, whether that's a small reaction, so maybe on the 5 minute we might see a rotation pattern and there might be a day trade worth 20 or 30 pips, or there may be a bigger swing in the market which happens at that psychological number. So it is something to pay attention to. That psychological number also comes in pretty much at the tops of the wicks just here. Yeah, it's about 8 pips short, but it comes in at the top just here. So that is also something to pay attention to. Now, in terms of structure, what do you guys notice in terms of a structure level here? Let me say a trend line structure. Can anybody see a trend line structure which we should draw out here? It's quite a key trend line structure. In fact, I'm not too sure how you're going to answer this other than yes. So I'll tell you what I'll do is I will draw on a trend line structure like this. Closes of the candles, we're looking about there. Okay. One just fell a little bit short there, but in all fairness, this just here, and I'm going to zoom in for this, guys. Okay. We have these on the closes of the candles just like this, but because of these wicks after these wicks here, we actually have the candles close a little higher. You could at a pinch move those down to there because we technically didn't close above that level, and that would actually mean then that this level hit. Okay, sometimes with trendline structure you need to try 2 or 3 different ways to work out what is going to the best, and sometimes we can't do it, but 3 times that level was tested. And what do you think has now, or what has now happened if I move this structure level down to here? We have now violated this trend line structure. So that is a little bit more confirmation that we could be seeing a pop to the upside. And in actual fact, if you did see, sorry guys, just one moment. Just one moment guys, I've got a phone call. Okay guys, sorry about that. That was not an expected phone call. That was my wife. She's at the Mercadona and she's forgotten her purse. So she's got to come home, and she doesn't have any house keys, so when she rings on I'm gonna have to let her in, or just leave her outside. Makes no difference to me. So, God, that's really mean. If this is a valid 2618 trade for you, what you could look for is a couple of things. I would wait for price to violate this level. So if price did violate up here, we've violated past the first chance entry, pull back for a 2618 because we've already violated this trend line. And if you believe price can go higher, well, that's one way of looking at it. For me, there's nothing really here, but we've pretty much broke down then this trade. Let's go and drop down to the lower time frame, knowing that we're at this internal level of structure at that 9100 psychological number. Hope she doesn't watch these. So she doesn't, thankfully. Leave her outside. We have charts to go through. Leave the wife. Leave her. I've only been together 16 years. I've told her anyway, I'm trading her in for a new model. She's getting too old. She's 35 now. Her response was, I'm getting too old. She said, you're 39 this year. I said, yeah, but men age better than women. And then came the punch into the arm. So, here on the 240. Yeah, I'm a big kid, Stuart. Okay, Stuart says, I say that to my wife too, but I'm a big kid. I always have been. I'm very much playful. I'm very much toy fight with the kids, toy fight with the wife. And do you know what? I'm a real bugger, because when I'm bored, and I have a lot of time free during the day. I'm actually starting a new project very soon, which is going to eat up a lot of my time. But I always have to be doing something, and when I have nothing to do, and literally, if it's 2 hours, it drives me insane. So I go and bore her. I go and bug her, should I say. You know, it might be just a water fight, or it just might be, you know, just toy fighting, or just scaring her. She's a right scaredy cat. I've only got to go boo and she jumps out of her skin. But she retaliates with a fist in my arm, and I really pay for it. Or she pulls the hairs out of my legs. Oh man, that's a killer. Or the chest is even worse. Anyway, this was a swing in the market, a directional move. Okay, then we had the market adhering to 1, 2, 3, 4, 5, and on these higher time frame trades, I always say the middle is the areas where we want to hide stops behind. Now, I'm actually just going to drop to the 60 because we can see this trade a little better. We had confirmation we were going to go higher here. We had a little double bottom here, and then as we came down to this level, we held structure and we had a higher high, higher close. And just as a little bit of extra confluence, down on the 15, we had another double bottom just down here. So lots of opportunities to get involved. The problem for me is if we go back to the 60 and I put a structure level on at the highs of structure, then we did not have a break above, close above. Okay, so wasn't an opportunity for me. However, guys, I will take these trades if we get a double bottom here. Now we got that double bottom. I missed the trade. I would have got involved here, stops an ATR below the low, so that would have been my risk, and my reward is that usual 127 extension. So I would have taken that trade even without the break above, close above, because we had the rotation pattern. And you know, I do sound like a broken record when I talk about these channels or these breakout patterns. Channels form double tops and double bottoms all the time, and rotation patterns. That's my wife, I'll just give her a minute. And so those rotation patterns, they're a rotation pattern, and it means price reverses, and it allows us to get tight stops and positive rewards to risk. So look at this, 64 pips of reward for around 28 pips of risk. We're looking at over a 2-to-1 reward to risk. High probability we were going higher because of the double bottom, but we just didn't have that extra break above, close above. I better let her in, guys, so just give me a moment if you will. Okay, sorry about that. Just probably one more disturbance to go, and then then no more disturbances. Did anybody in the end get involved with the Aussie dollar CAD trade? Oh, it was a beautiful trade. You could have even got involved just down here. This happened at 4 in the morning. I would have got involved here on the 15-minute double bottom, and that would have provided an even better reward to risk, something like this. And you know, I missed it, but the key thing is that I harp on about this all the time, and I know there's not been very many of them lately, but breakout patterns are usually this profitable for me. I mean, those of you that have been following me for a while, I say time and time again, look for the double bottom, look for the retest, and you will get reward to risks like this, and they do play out with over a 50% win rate. So that's the Aussie dollar CAD. Yeah, no real confirmation that we can go higher for me personally. I'm not too sure how high price can go, so at the moment I'm not too interested in anything. Yeah, nothing else for me, guys, on that one, so we'll move it out of the way. What to go over next? Nothing on the Aussie dollar, that hasn't moved. Let's bring over the Euro Aussie. Those of you that were in the chat yesterday, Stuart says, I have to go out, I'll catch you later. Take care, Stuart. Those of you that were in the webinar or the chat yesterday, we were looking for an entry to get long on this pattern. I'm just going to clear this up a little bit because we've still got the drawings on from last time. You know what, let's just delete it. Okay, we had a level of trendline structure that had been adhered to once, twice, 3 times. We were coming down for a 4th time, and we had a daily back pattern. Okay, there was a high probability we were going to see a reaction at this level. Okay, what I was hoping for was some sort of double bottom. We didn't get it, but if we drop down to the 240, what was happening yesterday is price was like this, and I said watch out, because we've come into previous structure, which is here. We've come into the 15900 psychological number. Watch, this could be one of those trades where we've had we could see a very big reversal very quickly. And I actually dropped down to the 15 and talked through this opportunity. Now it would have gone on to win. Well, would certainly be 300 pips up by now. But this was it just here, guys. I'm going to move it off like this. Okay, so we had a big momentum candle, a big bearish momentum candle, followed by an indecision candle, followed by a green candle. Now, that was not a higher high, higher close. Okay, that's a key thing here. But look at what we also had. We had the RSI go massively oversold at 7. What are we there? About 7.7, something like that. Okay, so we're down at previous structure. We put in a 3-bar reversal after a big momentum candle, and these are very powerful, guys. When I see a big momentum candle and all of a sudden there's a hold in the market and a 3-bar reversal with the RSI confirmation, this is a strong sign that we could be seeing a reversal. And when we see big momentum candles like this, when we start to see the reversal, we tend to see roughly the same amount of momentum going back. Okay, because it's like the market is just, imagine a basketball dropping from a high height. It's gaining momentum, it's going super quick, and when it hits the ground, it spends half a second slowing down, putting in a doji, and then as it starts to reverse and comes back up, it puts in a green candle, and then all of a sudden, boom, it shoots all the way back up. And that's typically what happens when we see these big bearish momentum candles and then a quick reversal with like a 3-bar reversal. Now, if you use that as the entry, let's just draw this out. Your stop's going ATR below the low, which was 27. That would have put me just below the psychological number. So you want to be a good 10 pips below that. So I'm just going to draw this out. I actually don't know if this would have gone on to win, but that would have been my risk in this instance. You saw the market try to push down a little lower, and boom, look at what we did. Big elephant candle, reversal, then we saw the same amount of movement back the other way. So this is very key if you're looking for a major structure level that's got it's been tested 3 or 4 times. On the dailies, you've got a big pattern, and then on the lower time frame you've come into previous structure, a psychological number, you've got 15-minute 3-bar reversal with the RSI confirmation, and you have a high probability of seeing the snap. And I called this within the chat, guys, and look at what we've now done. We have seen a big rally. So let me just go to the 240 and draw this out. Okay, so targets would be here, the 382. You would have got involved literally just here, and targets would be 300 pips, and you have a high probability now of rallying up to those targets. So beautiful opportunity, a little bit aggressive, but your risk on that trade would have been about 50 pips for 300, so like a 6-to-1 reward to risk. Very nice, guys, very nice. If I'm honest, I wish I'd taken the trade. I wish I'd taken the trade. So now that this has happened, do we want to say, okay, enough is enough, we missed our entry, let's skip on to the next trade? Or do you think if we drop down the time frames that we may see, as a result of this big bullish move here, these very directional moves, that we may enter trend? Just give me a yes if you think we should still look at getting involved with the trade and carrying this up to targets, or no, because we've missed our optimum entry. What do you guys think we should do? Do you think we should just leave it, or do you think we should drop down the time frames and see if we're in trend and see if we can get there? Yeah, of course, let's see, because look at the directional move. And remember, guys, with directional movement tends to be on the lower time frame trend continuation trades, because this is what happens. We see a very directional move like this, say on the 240, and then as you drop down to the 60 or even 15, we start to see this long extensions, small pullbacks, long extensions, small pullbacks, long extensions, small pullbacks. There's absolutely no reason why we can't use this as the entry, because we have that great big back pattern where we have a high probability of going up now to hit the remaining targets, which are worth 100 pips. So if the market is producing that type of movement, let's get involved with it. So here down on the 60-minute time frame, let's draw out the trend. So we had a move higher to this point, a small pullback. We then made a new high. This candle physically closed above the previous high. We saw a pullback, and now we've seen a new high. So guys, we are in trend on the 60-minute time frame. Let's look left. Have we violated any structure? Yes, we violated this level. We also violated this level. So we violated 2 levels of previous structure, and we're in trend. So very, very simple. We're going to be looking for trend continuation opportunities. A pullback. We highlight the outside return from the tops to the bottoms. Anywhere within this zone, we can look for the first chance, second chance, or third chance entry. Look at what we've just done here. A big bullish candle, a inverted hammer followed by a lower, lower, lower close. This is an indication that we could see a small move to the downside. So the trend is now valid here on the 60-minute. We are allowed, as per the educational material, to drop 1 time frame lower. That takes us to the 15-minute. And if we're using a second chance entry, guys, as the entry, what type of candle do we need in order to validate our entry? So if this is our price reversal zone, this highlighted area, if we come into it like we have done now, there's a particular candle that we need in order to gain our entry. What is it? Is it a doji? Is it a 3-bar reversal? Is it a hammer? Is it a higher high, higher close candle? What do you guys, those of you that have done the educational material, what is it that we need? I'm just seeing if we've actually had it here. It doesn't look like we have. Nope, we haven't had it here. A higher high, higher close, guys. So a pullback. We're then waiting for a higher high, higher close. Yeah, Ashraf, exactly. Higher high, higher close. So once the candle closes at higher high, a higher high and a higher close, chi. Okay, so the difference is, do 2 candles here. Excuse my amazing drawing. Damn it. You can imagine that those are the wicks. Okay, so this candle here, the close of the candle is here, the high of the wick is here, and a higher high. Let me reduce that down. Imagine it's like that. So this candle physically closed higher than the previous candle and has a higher wick. So it's a higher high and a higher close as well. So if we got the higher high, higher close within our price reversal area just here, okay, where would stop placement need to go, guys? Where would we put it? So this is where we enter on the close of the candle. Where would our stop loss need to go? The ATR is currently 15. It would go below our outside return. Does anybody know how many pips behind our outside return? Is it a full ATR? Is it 1.5 ATRs? Is it 2 ATRs? What do you guys think it should be? below, ATR below the outside return, exactly. So the ATR is 15, so 15 pips below the lowest level. The lowest level is here. That means that we're going to get our stop loss at 160.43. So 160.93. Hang on, I can't work out. 15.82. Can't count. There we go. 160.82. So I'm going to make this red. Just going to remove this candle because it's confusing things. Okay. So that would be our risk if we got the higher high, higher close. What do you guys notice about why I absolutely love my stop being just down here? What are you guys noticing? Remember all the things that we look at. Okay, when we're looking at gaining our entry, we look at things like AB equals CD patterns, we look at fibs, we look at bats, ciphers, gartleys as entries, we look at the RSI, we look at rotation patterns. We also look for one additional thing, and it's right down at this level, guys. Right down at this level we have the 16100. Yes, okay. We have seen, and it's been proven over the months that I've been doing these webinars, psychological number. So it is going to provide us extra confirmation, so our stop is in a very, very safe place. First targets, retest of the candle close, highs. Make that green. And I'm just going to go out to the 60. Did we say that there's room to go higher? Yes, we did. We're looking at taking secondary targets for a retest up here at that 382. Now, I think everybody will agree that this is a positive reward to risk, a very, very positive reward to risk actually, because we're looking at around 27 pips of risk, 55 to target ones, and 131 to target twos. Now, the only other thing to run over here, and this is entirely down to you guys. For me personally, I would take two targets in this example. Those of you that have been with me for a while, again, you may know the answer to this. Why do you think I would take two targets rather than just taking one target all the way up here? What do you think the reason is? I'll give it a minute, see if anybody responds. If you don't worry, I'll explain. But there are some reasons why I only play for a retest of the highs. But in this instance, I'm going to be playing for two targets. And there's a reason for that. And it's to do with we have a higher probability of hitting first targets than second targets. But does anybody know the actual reason why I want to take two targets? We have chance to hit the fib 38.2, okay? But what I'm saying is that I would take first targets at a retest of the highs here. And then I would hold for second targets, because in my opinion on this setup, we have a lower probability of hitting second targets. And there's a reason why we have a lower probability. But does anybody know that reason? I'll give it a few seconds. I'll do a countdown. 5, 4, 3, 2, 1. You had your chance, guys. You had your chance. Okay, let's take a bigger look at this. Inverted hammer. Nope. Okay, so we're looking at playing for targets for the bat pattern. So where is the safest place to have our stop loss, which will give us the highest probability of price going up to hit the 382 rather than going, say, to this level, reversing, and then going back up? Which this is what can happen. Okay, we may not just go in a straight line. So where is the safest place to have our stop loss to ensure that we have the highest probability of hitting the 382 target? Looking at this big bat pattern here, where is the safest place for our stop loss to go? Just type it in the chat, guys. Ashraf, you should know this one. Just look at the back pattern. On back patterns, where is the safest place to have our stop loss? Yeah, exactly. Below the X leg. Right down here. Okay, that is the safest place. Now, because though we have missed our optimum entry and we're dropping down the time frames, in this instance we're dropping down to the 60, even though we're in trend here, okay, even though we're in trend, the market can still do this. It can still rally up to hit first targets and then decide to reverse down to this level. Now what that means is if you was only holding for first targets up here, you don't bank any money, okay? The market has actually reversed and stopped you out for a loss of 27 pips. Okay, the market does not always move in a straight line, and when we're halfway towards targets, well, we can't put our stop in the safest place, can we? Our stop is just below here. But we know the highest probability of making this a winning trade is having our stop below here. So when we don't get our optimum entry and we're halfway towards targets or 3/4 of the way to targets, we want to be more cautious with playing for our targets, because again, the market never moves in a straight line. Sometimes we get small retracements and we enter trend, which is great. But even a 60-minute trend can easily get violated, because this is a daily back pattern and we could easily see a daily reversal before it goes on to hit that 382. So does everybody understand why it's a lower probability of hitting that 382? Because we haven't got our stop in the optimum place, even though we're in trend. Just give me a yes if you understand that. It's quite an important factor. I mean, this could just rally up. It absolutely could. But it's lower probability, that's the thing. Anyway, guys, back to the 15. Back to the 15. Ashraf below the X. Chi, yep. Yeah, okay, good. For me, that's a very important part of trading. I used to make that mistake and just hold for the big move. And trading, if you're holding for the big move every time, you're going to be seeing a lot more losses. And when I did my testing, in actual fact, it worked out less profitable. And what it did from a psychological point of view, in fact, Ashraf, I just remembered you did email me talking about psychology. I've seen the first line. I've not had time to go and read it. But this will help with psychology. And psychology, if you're taking more losses than winners, will play havoc with your psychology. What will help is if you're banking some money and then moving your second position to break even and holding for that second trade. And even if you don't get second positions, when the trade is over, you will be sat at your computer thinking, well, I didn't get second targets, what a shame, but you know what? I banked 60 pips today and got first targets. And it was the right decision to do, because if you'd held it, you wouldn't have banked anything. In fact, you would have lost 27 pips and you would have turned a perfectly good winning trade into a losing trade. And from a psychological point of view, that will play havoc. And if you're, look at it another way as well, if you're just forward testing, so you're playing with a very small account, let's just say you're playing with £1,000 and that trade was worth £3 to you and it lost. That doesn't have the same psychological attachment as it does, say, playing with a £10,000 account, because let's say you've saved for 2 years, you've worked your backside off for 2 years, you've saved £10,000, you're now trading live with the correct position size for 10,000 and you made a winning trade into a losing trade. That then is going to affect you greatly, because not only did you lose that money, but you're going to think, damn, I worked 2 years for that and I've made that silly mistake and effectively thrown away maybe 3 days of that 2 years worth of work. So it will affect you when you start trading correctly with your correct account size and position size, and that will help with the psychology. So guys, if we see a pullback down to here on the 15, I'm going to be involved with this trade exactly like this. Okay, 2 targets, stops and ATR below the outside return, below that psychological number. Remember guys, I had a very, very similar trade to this on the Euro Yen, which won for 55 pips the other day. Exactly the same, except on that one I only played for a retest of the highs because I had no confirmation we could go higher, and in actual fact it just reversed after that actually. So if we're all done on the Euro Aussie guys, I'm just going to make a note of that, and I'll put all that workings out on my proper charts when we're done here. So Euro Aussie 15 trend continuation. Okay. Euro Yen. Okie dokie, let's bring over the Euro Yen. Anybody got anything on this? Okay. Okay. So just to quickly run over the Euro Yen, very, very simple trend continuation opportunity I was in the other day. I still got the workings out. 1, 2, 3, 4, 5, and a pullback. Where did we pull back to? Our outside return. This candle just here was a higher high, higher close. Stops went at ATR below this level, so this was my risk, and I played for a retest of the highs, and I banked, it says 61, but I actually banked 55 pips on that trade. And then what we saw yesterday is we saw some news come out. We saw a big rally lower, this level of structure was held, and boom, we've rallied back up again. So let's go ahead and do the higher time frame analysis here. Okay, structure level on at our very lows just here, and we have not come down into that structure level as yet. So okay, let's draw out the trend. So I move lower, I pull back, I move lower, I pull back, I move lower, I pull back to this level, and then I move lower. So guys, if this is the outside return just here, and there is room for the market to come lower down to this point, we are now up within, what level are we up in guys? The first chance, the second chance, or the last chance entry? This is the outside return. Are we in the first chance, second chance, or last chance entry? And also, what type of entry do we need up here in order to short the market out? There's 2 of them actually, 2 types of entries. Chuck them in the chat for me guys. Last chance entry. Ashraf, you're on fire. You're on fire. You want to help with your psychology. This will help with your psychology, answering the questions, knowing that you're correct. It will simply just give you confidence, and it will reduce your chances of sabotaging the trades and reducing your emotions down. Chi as well, last chance entry. Yeah, double top. What's the other one? There's 2 rotation patterns, isn't there guys, we can look for? Vacation effect. Do you know what? It absolutely works, that Ashraf. It absolutely works. When I get into a project, I unfortunately spend weeks working at it with very little break, and you end up with mind block, literally just mind block. Remember the Excel file, which I still haven't completed. It's 90% done, the backtesting spreadsheet, and you've seen how advanced that is. Okay, and I was stuck on a section for days, absolutely days. I was working on it like 12 hours a day, and for the life of me, I could not see the problem. I had a rest. I had a complete day off. And when I woke up in the morning at 6, I sat down by the computer. In 10 minutes, I found the problem. Because your mind subconsciously still thinks about it even though you're not thinking about it, and you have time to relax, you have time to kind of take a step back and look outside the box. And it's amazing, the answer just comes to you like that. It is very important to take a break when you do your back testing. If you're sat there for 4 hours straight, you're not going to intake the information. You're going to miss things, you're going to forget things. You may think you're doing a good job, but unbeknown to you, you will be making mistakes and you will be missing things. Having regular breaks in anything that you do, I would recommend only doing your back testing for 30 minutes at a time. Go and take a 5-minute break, a walk, go make a brew, go and have a little bit to eat. Physically take yourself away from your charts. It's amazing the difference it will make to your mindset, to your psychology, your emotional state, and it will allow you to come back clearly and thinking correctly about your trading. Chi says it looks like a cipher. I think you're looking at this. Is this what you're looking at? X to A to B, B to C, CD completion is just about up here. Could be a cipher. 1, 2, 3, yeah, valid cipher just here. Has it just tapped? Okay, completion's a little higher. It's on the daily, so it's not anything I'm interested in, but cipher pattern there. But right now we are in the last chance entry. I'm going to say it again, guys. What else do we want to look at? There's two things that we need to look at here. One is the RSI, so I'll tell you that now. We are not overbought. What's the other thing we want to be looking at? That I love. I'll just say that I love, and then you should know what it is. Psychological number just here, 112. And look at that, we have just tapped it. Okay, so let's drop down to the 240. First of all, is it still valid? Well, yes, we have. I need to draw this out correctly. Okay, we are still held this structure level, and we have not as yet violated above it. So we could see a double top. The first thing we want to see is the RSI. Do we have the RSI confirmation? We need to be on the first test overbought, and we are not. Just here, we're at 66, so we are not going to see a double top here. So that's one of the rotation patterns out of the window. Let's drop down to the 60. Is there a potential for a head and shoulders? And no, this formation here is not a head and shoulders for me. In fact, it looks like we could see a breakout here on the 15. So there's going to be no rotation pattern at that level. So for me, forget even looking at a short opportunity now. Let's go down to the 15. No, okay. Back to the 60. What I was looking at was this, guys. It's not going to be valid for me, but we have a swing in the market just here, which is indicative of a breakout pattern. A move higher, this is not going to be valid, guys. We didn't come up for the second test up here. Okay, so it's not going to be valid, but there is 4 tests. We've got an indecision candle here. There's no rotation pattern on the higher time frame. It's looking like we are going to see a break to the upside, but it's not a pattern that I can physically trade. So, any questions on the euro yen, guys? We'll come back to this tomorrow. It's a shame that that's not valid, because one thing you want to pay attention to with these breakout patterns is the longer the pole, the further away the 127 is, and it provides you a better reward to risk. but again, it's not valid for me. Even though it looks as though we could see a big breakout here, it just doesn't meet the rules for me. So we're going to move that one off to the side. Just going to quickly bring back the Euro Aussie that we've been talking about, and we're seeing a move higher now, but pay attention to, if price does not touch this level, then what we can look for is X to A to B, B to C, CD completion for a Gartley pattern, guys, okay? However, if price does come up and test the closes of the candles, we would have effectively double topped and reached our destination. Therefore, I cannot look for a trend continuation trade anymore. But if we don't and we pull back for this Gartley pattern, it's going to be a very deep Gartley as well, then yet we can use this as the entry. Like this. Okay guys, so make a note of that as well, stroke Gartley. So keep an eye out for that trade. What else have we got? Let's move over to the euro dollar, the nice 100 pip winner we had yesterday. Did anybody get involved with that trade? It was sent out as a signal. It was a beautiful 100 pip winner. Ah, damn it, that's Euro New Zealand. Okay, forget that one. Not that one. Euro dollar, here we go. Oh, damn, look at that. In the last webinar, we also spoke about this flag pattern, and look what actually happened. We had ECB news out, and so I personally wouldn't have got involved with the flag because of the ECB news, but we spoke about this just here. 4 touches on the flag. We'd seen a red candle, we'd come into previous structure, but ECB news made it rally up. It's a big spike and then boom, rallied all the way down. So a beautiful winning flag pattern there, but couldn't get involved because of the ECB, and you would have been stopped out if you took it because of the news event. But the 100 pip winning trade was a beauty. Let's go out to the dailies. We'll talk through this and we'll look at where price is actually at the moment. So the market had moved lower. We saw a pullback. We'd seen it move lower and we saw it pull back. If we highlight the wicks right here, there was a doji candle. Imagine this in real time, guys, like this. There was a doji candle, and within the wicks we're allowed to drop 1 time frame lower and look for a rotation pattern down to the 240. And within the wicks, within this highlighted blue area right here, guys, we had a double top. It is only valid if we had the RSI confirmation, so we were overbought with divergence. I sold the market. You know, guys, I have 3 accounts. On this account, the one that I submit the trade signals to, targets were here. Boom, we came down and smashed those targets. Okay, it banked just short of 100 pips. Very, very nice move indeed. And then straight after that, guys, again, if you're in the chat, if you're not in the chat, you miss a lot of this, but if you were in the chat, soon as we hit, I posted this Gartley pattern, X to A to B, B to C, CD completion, and boom, the market rallied straight the other way for another 100 pip 2 target winner. So very, very nice 2 winning trades there on the euro dollar. Was anybody involved in either of those trades? I'm just checking something just while I'm waiting for your responses. Where is it? Show data box. Okay. So we've got the low at 109.26, 109.27, Okay, so yeah, we do. Okay, we have another pattern here, guys. X to A to B, B to C, B to C, CD completion up around this level. And to make that a Gartley pattern. Okay, so entry would be the 127 from the B point to the C point. Look at that for an eye, right on the nose, just there. So you have a Gartley pattern. She didn't get involved. Yeah, to be honest, it's good to see some bloody winning trades. Again, my trading, guys, typically I don't tend to have a big drawdown, and that's because I've got a good range of high probability trades: trend continuation, breakout patterns, head and shoulders are typically the main three. So when one does poor, the others do better. 5 range trading as well. I haven't seen any of that in months, so my trading has really been out of sync. And to be honest, guys, it's been a real shame, because what's happened is a lot of people, I'll be honest with you, a lot of people have left because the signal service has done so poor. You remember, guys, we did awesome for the first 3 weeks. I banked something like 700 pips, and then boom, boom, boom for about 8 weeks after. My trading, just because of Brexit and all the news, just every single time was the wrong side. But I also had 700 pips of winners that just got stopped out by 1 to 2 pips, which really, really affected the balance. And it's a shame, because I only brought in the signal service to try and build people's accounts up with my own. And that, I thought, in theory, would pay for the subscription of $70 a month. And it was just a real damn shame that at the time we just hit a massive drawdown, and people couldn't deal with that. And as a result of it, we've lost something like 50 to 60% of the people on board, which is a real shame, because the education that's provided is good quality. 2 years worth of back testing is in there, and it's good high probability winning trades. And it's just one of those things. There's been many other companies out there that have produced systems and educational materials, sold it, and then it's taken them into a year-long drawdown, and there's nothing you can do about that if it's just bad timing. In actual fact, I'm thinking of getting rid of the signal service, because the educational system is good enough. I mean, I could sell the educational system materials. Some places you can pay 500, $2,000 for it. £300 a month. I'm really not in it for the money. If I earn just enough money so it pays for the site, then I'm just happy with that. I'm just happy to do that. So I may get rid of the signal service for that reason, but it was solely there to help people, and I just hit a massive drawdown. But anyway, the webinars and everything else will still continue. I haven't quite decided yet, but they will still continue. Yeah, don't worry, Chi. Listen, it's no problem. I understand. But a lot of people as well use the wrong position size. And there was a couple of people I know blew their account when they shouldn't have done. They should have only been about 17% down. So down to position sizes as well. But hey, that's all part of trading if you use the wrong position size, and this kind of thing happens. And remember, guys, we're seeing anywhere between 2 and 15 year new highs or new lows on the majority of currency pairs. Okay, we are really seeing things we've not seen for over a decade within trading. Doesn't mean that the structure doesn't work. It doesn't mean fibs don't work or patterns don't work. It just means we're seeing not unprecedented, but things happen that we haven't seen for 10 or 15 years, and that's really made a big difference to trading. In my personal trading, for other people, hell, they might have done really well and banked thousands of pips on the great moves that have happened, but for my personal trading, the way I trade, it had the opposite effect. back to the euro dollar, guys. I'm going to be waiting for price to come up to this level, and I'm going to be looking for a rotation pattern. If we get a double top up here, that'll be my risk. My reward will be something down here at the 382. Let me redo that. So there's the 382. Risk is going to be a little bit less. Okay, so I'm going to be waiting for the euro dollar. I'm going to drop straight to the 15, guys. We'll see if there's anything here because we're moving very directionally. Not too much. You could make the case that we had a move higher, a pullback, a move higher, a pullback, a move higher, a pullback. Looks as though we're moving higher now. The problem is when we move higher, we will hit the 127, which is the completion of the Gartley. So even though we're in trend on the 15, there would be no reason to short the market, to play continuation. Unless, of course, you don't trade these patterns and you just play for a retest of the high for trend continuation. But I'm going to be waiting for a short on that trade. Any questions on the euro dollar? Anybody short the New Zealand dollar? What account do I have up here? Ashraf is. Excellent, Ashraf. Excellent. If that wins, that will be the euro dollar and the New Zealand dollar both winning on a first chance entry. I'm actually in this. I've actually moved some of my funds around. I sold a couple of properties. I've been selling some properties in England. I've been putting more money into my trading account. That's just gone in literally this week. So I've been able to increase my position size. And it does mean that on this account, this is the biggest trade I've now ever been in. So on this account, I'm now in for a full 4.5 lots on this trade, and we're currently 20 pips up. So fingers crossed that goes on to win. That will actually make back a very large proportion of what I've lost over the past 2 months. That's not the way trading should work, is obviously increasing your position size. It's just the way it works out for me because I've put more money into trading. So 20 pips up, and we've had confirmation we're going to go lower on that trade. So I've got everything crossed for that one. It's worth a lot of money if that one comes off. Plus, New Zealand dollar isn't a major mover, but if we could see a fairly directional move in the next week, it could go on for 2 weeks, that trade. But a nice move. At the end of next week, we could see targets hit on that potential trade. Anthony, Chris, gut feel, how do you think the euro will come? You're talking about the euro dollar, still short. There is still room for the market to go lower. Now, if you're talking about news as what I think news will do, ask somebody else. I don't know. I can tell you from a technical perspective on the euro, there is room for it to go lower. Here's the thing though, guys. Parliament had been in recess in the UK until tomorrow. However, a Scottish court have just ruled that that was unlawful. So I've not actually watched any news. I don't know if Parliament is back or they're not. How the vote goes, whether we leave Brexit with a deal or we leave without a deal, will have a massive impact on the financial market. Okay, guys? When that news event is due to come out, I will not be in a single position. I won't be in any swing trades, in any daily 240, nothing, because that thing could just plummet 500 pips one way or another, or rally 500 pips. I don't know. Technically, it could still come lower. Pound Aussie, there was nothing on it, absolutely nothing for the last few days, and now I think we have a butterfly. Oh, 1 second, I want to check the butterfly on the pound New Zealand. Ugh. Butterfly just rallied through. Okay, so I'm not even going to attempt to draw out where any type of trend is here on the pound Aussie. We are in consolidation, okay guys? We are in consolidation, so really there's only going to be some lower time frame trades that I would look at here. 240, we do have this, guys, from this leg here we have a butterfly pattern. There are two ways to work butterflies. The most common way, which happens more often, is we hit the 127 and we see a reversal. Let's go down to the 60-minute time frame. Okay. Now here on the 60, we are still holding structure. We technically have not closed above that. We've got 12 minutes to wait, and if we get a structure hold here, this could be a strong signal that we could see a reversal for this pattern. Also guys, RSI is massively overbought at 88. Let's drop down to the 15. Now here on the 15 we have already broken above, so drop back down to the 60 and wait and see what happens here, guys. If you get a hold here and a lower close, that would give you a nice 3-bar reversal. Targets down at this level, it would give you around 60 pips of reward, but your risk would be, well, maybe 70 or 80 pips, something like that. Let's just take a look at the 5 range. On the lower time frames, it can put in rotation patterns like head and shoulders, and you can use them and be a little bit more aggressive with your entry because it gives you tighter stops as well. So you might just get 20 or 30 pips of risk for maybe 70 pips of reward. Damn, what's going on with my 5 range? Damn it. Okay, let me bring over a new chart, pound Aussie. Oh, okay guys, my you're gonna have to give me a minute. Sorry, I've got to reset it. It's done that thing where when you change the time frame, it puts all your charts down to blank basically. So it only does it on this Ninja Trader on my computer. It doesn't do it on my Ninja Trader on my VPS. I don't know why the hell it does it, but just give me a second while I get it loaded, guys. Oh dear, one problem after another. Best of luck to you as well, Ashraf, on that trade. It's worth a good 100 odd pips, I think, that one. So let's try this again. Connect FXCM swing account. Okay, I need a new chart. File, workspaces. New chart. Forex pound Aussie. Okay. There's the pound Aussie. Fingers crossed this time the 5 range chart will work. There we go. There we go. Okay, just let me go back to the 60 and let's do the top-down analysis here. So, structure level in here. RSI massively overbought, looking like we could see a structure hold based on X to A to B, B to C, CD completion up here. Okay, so let's drop down to the 15. On the 15 we've already had the break above, close above. If we drop down to the 5, okay. If you don't trade butterfly patterns, what type of trading opportunity do you have here, guys? Move higher, pull back. Move higher, pull back. Move higher, pull back. What type of opportunity do we have here? I'm actually going to look at this on the 5 range. Yeah, exactly, Ashraf. Trend continuation higher. Here on the 5 range, it gives you a different look at price action. Okay, this is the price reversal zone just here. Look right, guys, psychological number just here, giving you a nice place to hide your stop loss. The problem is again, we're up at previous structure on the 60. We could see a structure hold. Now, if we don't and we get a break above, close above, then that's an indication that price is going to go higher. And what that will do is that will give you extra confirmation that this could be a trend continuation trade instead of it being a potential reversal. So does everybody understand that? Let me go through that again. We have a butterfly pattern which is right up here at our X leg. In 7 minutes time, if this candle, which is being formed right now, holds structure, it's an indication that, well, it tells us that we've not broken above and we're holding the structure level. We could see a reversal. If it physically closes above this X leg, when we go back down to the 5 range, it'll mean that this trend continuation opportunity has a higher probability of breaking to the upside. This would be something like your risk, this would be something like your reward for first targets. It would give you something like a lovely 42 pip trade. Let's move that to one side. We've got 5 minutes, guys, so we'll monitor that trade for 5 minutes. Pound yen. There we go, guys. We've been talking about this for a long time. Pound yen has now reached the area that we thought it would. What a beautiful move, man. 700 pips. Oh, and quick as well. Very, very quick. This, from the 2nd to 11 days, we've seen a 700 pip move based on that double bottom. Wow, what a beautiful, beautiful move. Daily time frame, drawing out the trend. Move lower, pull back. Move lower, pull back. Move lower, pull back, move lower, double bottom rotation pattern, bang. Where would we have taken targets? In previous structure, which is the previous outside return. We have now hit the area where we thought price would go to. What a beautiful move. So I now have no prediction as to whether the market is going to go higher because we're at previous structure. And I've got no confirmation that the market's going to go lower because we've just had a rotation pattern. So I've got nothing at all. If we do this, if we break above that structure level, we can look for a pullback. You could maybe look for a long, but if you did this, well, now you're in trend, and you then look for another pullback and then another chance to get long. So remember, guys, we're at something like 10-year lows or something, and we're at the Brexit turning point, aren't we? We've had a big daily rotation pattern, and this could be the point that says, okay, the pound yen is not going lower anymore. This is the big daily turning point, and we may start seeing some stability and back up into structure that has been recent instead of structure that hasn't been recent. Okay, so that's what could happen. Let's go down to the 240, nothing but a bullish move, down to a 60, nothing but bullish moves, down to the 15, nothing but bullish moves. Do you think on the 5 range there may have been some opportunity to get involved in a trend continuation trade? Let's work it out. Okay, so from the very lows here, guys, move higher, pull back, move higher, pull back, move higher, pull back. Where did we pull back to? The outside return. We did make a move higher here. We saw a pullback, and then I'm going to zoom in for this. Right here we had a move higher, pullback, move higher, pullback, move higher, pullback. We did violate this outside return only just, but then move higher, pullback, move higher, pullback, move higher. Now we're seeing a pullback. So guys, lots and lots of opportunity on the 5 range to get involved. With the 5 range though, you really want the higher time frame confirmation that we can go higher, because otherwise you're simply just trading a trend continuation trade based on one time frame, and that's your entry time frame. But if you have higher time frame confirmation like the 60 or the 240 or the daily, well, then you're adding more confluence to your trading. You have higher probability. And that's what we want. We want high probability, and we want it with good entries. Bye bye, pound yen. Bring back the pound Aussie, guys. Still moving lower, so it looks as though this is going to be a structure hold. It's going to give you a very nice pin bar, guys. Very nice pin bar indeed. It's got just a few seconds to go. Oh, we're seeing a rally. Let's just give this a minute, guys. What time are we on? 20 seconds. Now for this to be a confirmed break above, close above, see the wick just here? We actually need to close above that wick, guys. That would give us a break above, close above. Let's just go back to the 5 range, or the 5 minute actually. Could it produce a head and shoulders? Okay. Okay, on the 60 we have now got confirmation. We have seen a structure hold. So we could see here, guys, this. Move higher, pull back. Move higher, pull back. Look for a violation here. Look for a pullback anywhere within this outside return. Look for a lower low, lower close. That would give you a potential head and shoulders entry with a short. What you can also look for is a double top, like this. Come on. This would provide you this much risk, this much reward. Now that happens. It does happen. It happens more often than you think. Thing with the 5 range is you actually need to be by your charts monitoring this. Okay, but all you've got right now on the 60-minute time frame is a structure hold. So you need a break below, close below the outside return, and that's going to give you an initial structure low. Those of you that have done the educational material and know how to read trend, An initial structure low is an indication that we could see a reversal in trend. So we need to wait for that, wait for a pullback, then a lower low, lower close. You may even be able to do this on the 5 minute. Yeah, you could certainly do this on the 5 minute as well. And if you don't get it, guess what's going to happen? Price is going to rally up, and we will continue in the next hour violate structure. So keep an eye out on that. I'm also going to make a note of that. Pound Aussie head and shoulders 5 and 5 range. Okay, move that off to one side. And I'm going to call the pound dollar the last one, guys. Is there any other currency pairs you guys would like me to take a look at? I don't think there's anything to go through on the pound dollar, to be honest, but we have just violated. So we did speak about this last time, about how this could be a double top and how it could be a head and shoulders, but how we needed it to give us an initial structure low before we can even look at shorting the market. And look at what we did. We just violated to the upside. So we're having a very directional move at the moment. We've got this level right here, which is double bottomed, but let's draw out the trend. Move lower, pull back, move lower, pull back, move lower, pull back, move lower, pull back, move lower, rotation pattern, move higher. We go and highlight the outside return. We are now within the outside return area, so I would not be looking for any short opportunities until the outside return has been violated. So we violate it, it gives us an initial structure high. You look for a pullback, and if you wait for another extension, that gives us a new structure high and gives us a 3-point move, putting us officially in trend. Wait for another pullback, there's your outside return, and then look at getting long. For now, let's go down to the 240, 60. Here on the 60, the RSI is at 92. We are at, we've just put in a inverted hammer, bit of a rejection candle. Does it come in at any form of structure? Well, not really, nothing that I'm interested in. Let's take a look at the 5 range. With that directional movement, we've probably got trend on the 5 range. And we certainly do, guys. Look, move higher, pull back, move higher, pull back, move higher, highlight the entire outside return. Look at what we've already done right here, guys. Second chance entry. We've come into the candle bodies. We had a higher high, higher close, so this would be your risk. The question is, how high could price go? That is the question, because we're already within the middle of the outside return. We have no idea how high price can now go. Now, if you wanted to, you could say, okay, well, I'm just going to play for a psychological number all the way up here. The problem is you're not playing for structure. You've got no confirmation how much higher price can go, which is a real shame. So no opportunity there for me. And that's the end of those trades, guys. Just going back to the pound Aussie, look at what we're doing. We've now put in a higher high, higher close. Okay, indication here that we're now going to see a trend continuation higher. But monitor it, you never know what's going to happen. We may just do this. We may double top. Get your violation, pull back for a 26.18, giving you still a head and shoulders, and boom, a move to the downside, guys. So play play, pay close attention to the pound Aussie, guys. So any other currency pairs you want me to take a look at while I'm waiting for your responses? Just a reminder, watch out for the big euro dollar Gartley pattern. And what else was there? Not too much else, guys, not too much else. So Ashraf, best of luck in your New Zealand dollar trade. I will wish myself good luck as well. I want to thank you all for joining me again for another webinar. This week I've really enjoyed the webinars because they've been so different to the last 6 weeks. They've been painful the last 6 weeks, guys. But there's been this week a couple of winners for me. A trade I'm still in on the New Zealand dollar. I've already banked 150 pips this week. The New Zealand dollar is up. We've got about 3 opportunities which played out really nicely. I didn't go through the dollar yen, but that was still got the workings out there. Another winning trade, but I couldn't get involved. The reward to risk wasn't good enough. But it's nice to see that my style of trading, certainly this week, has come back with a vengeance. So thank you very much, guys. I will see you all within the platform.